Good evening and welcome back to another video. We start today with a quote from Mike Novogratz, the famous Bitcoin bull, that every macro fund should hold at least 1% in Bitcoin. And the article basically goes on to mention that I'll just scroll down to the first part. It's not that important. This part is. So it says, Novogratz said it won't go there 20 trillion right away. What is going to happen is one of these intrepid pension funds, somebody who is a market leader, is going to say, you know what, we've got custody, Goldman Sachs is involved, Bloomberg has an index, and I can track my performance against, and they're going to buy. And all of a sudden, the second guys buy. The same FOMO that we saw in the retail will be demonstrated by institutional investors. So I just wanted to read that snippet, and I kind of then wanted to talk about it. So once we have custody, and that custody will come from security of having, and this is why on the flip side where the ETF is only important, so the SEC can say to institutional investors, hey, listen, we've looked at the a description of how security and custody is going to work for Bitcoin ETF, and we believe that this company X has solved it, and other companies will follow and do the same. So that side, yes, custody is important, but once other companies discover that there is a custody solution and it's solved by X company who's going to hold this much Bitcoin for everybody, and this is their insurance policy, blah blah blah, then other companies, other investment funds, other pension funds, even places like universities, and that sounds a bit funny to say, but don't forget, I think the major universities in the US like Harvard, Stanford, Yale, they all have massive funds which they do invest in. They don't just necessarily just educate. They have a massive fund. They need to get the university going, so they invest in your regular stocks and bonds and gold. And there have also been conversations of whether, I think it was Harvard or whether it was Yale, investing in cryptocurrencies, and probably most likely going to be Bitcoin or Ethereum into them. So if every major fund out there, pension fund, whatever, was going to invest in maybe 1% into Bitcoin, how much more liquidity would that add? And obviously, when he talks about a $20 trillion market cap, I think he's talking about market cap as opposed to $20 trillion Bitcoin market cap, because that means the total market cap would be around 50 or 60 trillion, which is at the moment unthinkable because we haven't even got to 1 trillion yet. But it can get to those levels. So everything that you own, so your money goes into the pension, every time you get paid, a portion of your money is paid off into a pension, and that pension is then divided into sort of low risk companies and whatnot, and you can have your own private pension or whatever. Now, if that pension was going to invest merely 1% or 2% of everybody's money which had invested into Bitcoin, and that was proper Bitcoin, not paper trail, or it transferred into fiat Bitcoin, and it tracked against Bitcoin, then you've got a situation where pension companies are now buying Bitcoin, similar to how other funds or stock funds, for example, you may invest into a fund which invests in the top 20 most valuable companies out there, and one day that potentially could be Bitcoin. And well, it's not a company, it's a currency, but just as people invest in gold, they would then invest in Bitcoin. So obviously very, very good point that Novogratz has made, and it will happen. Of course it's going to happen. You've got something which has got massive potential, and a mere 1% of someone's funds is minuscule over years and years. So imagine if in your pension fund, over a course of, let's say, 40 years, you had amassed something like $500,000 no, let's say $1 million in your pension pot. If you had a mere 1%, which is $10,000, and that $10,000 was invested in Bitcoin, and over the years, obviously, I'm not talking about the fact that you'd own 3 Bitcoin, because obviously prices will be moving, you'd hope, in 40 years, but over that time, you may have amassed, let's just say, half a Bitcoin in 40 years, but in 40 years' time, that Bitcoin could be worth, half a Bitcoin might be worth, $150,000 or something, or $200,000. And obviously, if everybody started doing that, small percentages, and this is how the rest of the world gets hold of Bitcoin. But this also depends on how much Bitcoin is left and how much it will be worth. There's only so much floating around out there, and people need to snap it up, almost like a Boxing Day sale, because there isn't that much to go around anymore. So you can fund against it, and you can hedge against it, and you can have funds of Bitcoin, but ultimately you would still want to own the Bitcoin, and there's only ever going to be so much. So you may get to a point you'd have 0.05 of a Bitcoin, and that's worth $25,000, and that's added to your pension pot, and probably that's going to be one of the most valuable parts of your pension in terms of what has prices gone up over the years. So yeah, a good interesting point from Nevergratz. I would like to see the first pension fund to offer out Bitcoin, and if there are already some out there at the moment. So interesting. And anyway, let's move on. So I saw an article here which is something which is a 2013 conversation, reiterated. Early Bitcoin bull calls BTC run to $250,000. So the author of a 2013 book, Bitcoin Explained Simply, says he stands by his prediction that Bitcoin will reach a third act that will bring the price of BTC to $250,000. Mark Jeffries compared the crypto bear market to the crash of the dot-com bubble that began to burst in the year 2000. I think it's very much like the dot-com boom and bust cycle that we saw in the late 1990s, early 2000s. We've just got through the analog of the cycle in crypto universe in a compressed time frame. I think people got very over-exuberant and probably extended themselves a little bit too far, and then they got scared. And don't forget that the traditional markets have also experienced a lot of crashing and volatility, so it's not just isolated to crypto. So I think that is affecting the crypto universe to a certain degree. This is not the end of the story. This is the middle part. This is the second act. The third act is Return of the Jedi. So you can obviously click on this link and it'll take you onto the actual, I think, podcast for the next billion seconds. So let's just quickly go over what this. Yeah, I mean, there's so much comparison, so many parallels between the cryptocurrency market and the original internet and the dot-com boom. So what do you have in the early 90s, late 90s, like your 95, 96s? You had Amazon, you had Yahoo, you had books.com, no, not books, I think Books Online, BOL, yeah, booksonline.com, you had Alta Vista, and you had Lycos, and you had a lot of search engines and not much company. So Amazon was kind of the first sort of companies that existed, and Amazon just did books. So that's kind of your first act. And then you moved into the 2000s, and Amazon started doing a little bit more than just books. You could buy books, but you could also buy games, you could buy a variety of things, but you didn't have a massive marketplace like it does today. Then it came along your Googles and your probably like MySpace at that time. So taking early on in the 2000s, you then had all the live messenger chats like MSN and Yahoo Messenger and anything else at the time, Skype obviously at the time. And you had third act when you've had like interactive Web 2.0, Facebook and Twitter and Instagram and Snapchat, and the money which has come in. And similarly, you can look at the time of Bitcoin, and it got, of course, in a compressed time like this. Um, Mark Jeffries talks about. So in 10 years, you've gone from 2008, 2009, Bitcoin first came about. Then you saw a big hike up to around 2013 time, 2014 time. Then you had Bangkok's crash. You had a bit of a crash there, and then you had a resurgence of Bitcoin. But along with that, you had other coins there like Litecoin. You had Dark Coin, you had WorldCoin, you had other coins, some of them died off, some of them remained, you had Dogecoin and things like that. That was your early days. Now you've got almost the second act now, where you've got 2,000 cryptocurrencies in the market, and people were burnt in 2017, 2018. They invested in a very high point. They invested in Bitcoin between $15,000 to $20,000. They invested in a Ripple XRP at $3.61. They invested in Ethereum at $1,400, and everything just dropped, and people bailed, and all the FUD came in, your fear, uncertainty, and doubt, and they bailed hard, and the market dropped. What's the third act? The third act will be heavy investment into the main coins, which will be the world solvers, the killing off of the CRIP coins, and then the market will shrink in terms of coins, but grow in terms of money, because you're left with things which work, and the ones which work have majority of the money in them, because there's not that much coins to spread your wealth against. So where you invested in 50 coins at one point, you invested in 7. So I think that's the third act, where more people throw themselves back into the market, because it becomes, in terms of stable, that it continues to go up with some corrections, but it hasn't got massive drops. And you've got products which do actually have real clients, real customers, real solutions, and not just white papers which promise a lot of things and don't deliver. I'm not saying other cryptocurrencies may come and prove better, but they will know the game that will be out there. Is they need to get a product out there quickly as possible. You'll never get a company taking on Apple, talk about a phone, hang around for 5 years and then release it. They will need to do the research, do the R&D, do all the back, do all the sampling, get all the testing done, get the money, release a phone in quick speed, and also have all the partners working with them. Apple never launches a phone on launch day in September, October time, and it doesn't have any partners already which know about the phone. Will come on keynote speech will be EA and Activision and Blizzard and all these companies will talk about the phone, which has just been released, and they've all got the software. So that is going to be the future, that you've had products released with already secured partners. Ripple have had an easy time in terms of they've been able to secure partners slowly, because they are really by themselves in what they're doing. Stellar is there, but it's not competing with XRP at the moment, or in terms of Ripple as a company. So they've had a lot of time to secure partners over the last 3-4 years, building their base. And the third act will be all companies using XRapid, most companies with an ETF of Bitcoin. You've got backed 3.0 there, or 2.0, where it's got loads of other companies on board. People are buying coffees with Bitcoin. It becomes your day-to-day, just like how we use the internet day-to-day. Everything is based on the internet. We do internet banking, we have WhatsApp, we do cloud for photos and backups, and that's exactly where I think Mark Jeffries is going to, with the fact that third act will be, it's just revolves around your life. Bitcoin revolves. So you want to send somebody payment, you use XRP. You want to store value, you may use Bitcoin. And this is why I think there'll be not many currencies left, because now you've got an instant transfer saying like XRP, and it's gonna, let's say, takes over or takes a percentage of Swift and takes over Western Union and MoneyGram. You've now got a big payment method there. You've got Ethereum for smart contracts and things like that. And also, you can say also for transfers, as long as things do work out with Constantinople. then kind of what's left, unless they start people start doing things like identity cards on the blockchain, then it becomes unlimited of what your thoughts may be. But at the moment, where your life will fit in with certain things will be, that's why I keep talking about Bitcoin and XRP and Ethereum and EOS, because these are the ones which are going to, I think, will build out and survive, and they're the ones which will be in the final stage of this history or life of crypto. And that's when I think, if you go back to Mike Novogratz piece, that's when you will have your 10, 20, 30 trillion dollar market cap, because you would have smashed past 1 trillion. I mean, looking back on when you were sitting at $10 trillion market cap, 1 trillion would have looked very easy. Getting from 10 to 40 trillion, that was the next big jump. But it will become everyday life. And at the moment, it's not. I mean, I can speak to my neighbours about Bitcoin, and I live in a village, so most of them probably wouldn't know what Bitcoin is. Well, I don't expect them to know what Bitcoin is, only merely because, sounds a bit ageist, but of their age. But it'll get to a point where they all know about Bitcoin, and they will have to, because it will become the currency for certain nations, and XRP will be the currency used for transfers or interbank transfers. If you ever bought a house and you have to deposit your money to the solicitor to hold on to it, is it not quicker knowing that the money goes from your bank to your solicitor in 3 seconds? And there's a complete history of the ledger of what just happened, and that's where you get it revolves around your life type situation with cryptocurrency. So, yeah, of course, if Bitcoin hitting $250,000 is entirely possible. In fact, I think it'll hit it sooner rather than later, and that only depends on where we are by June time this year, because we're expecting a lot of things to launch in March, April time, kind of mainly in March, which is all the companies keep talking about, or the second quarter, which is April, and then we'll see, and then slowly we expect the Bitcoin price to rise, and I think personally we're going to get to the third act for cryptocurrency way faster than the internet revolution. We'll be able to hit other countries quicker than internet ever has in terms of reachability, because there's not just one way to hit the internet and get Bitcoin now. Is it Blockstream I heard today who are working on a satellite solution for Bitcoin payments for people who don't have internet? So it'll have a wider reach. We've already got Dash using text message cryptocurrency transfers in Venezuela. So all the rumblings are already there, all the hallmarks are already there. People just don't want to look at these things or choose to ignore these things, and before you know it, they're already outpriced out of the market. So now, if you go buy 0.01 Bitcoin, you're looking around $55. Think about it in 3 years' time, what it would cost to get 0.01 of a Bitcoin. And again, just my personal opinion, why I keep buying small amounts of Bitcoin amongst other coins is because one day that 0.01 on a $250,000 Bitcoin will be $2,500. So you are working the basis that every time you are spending $55, you're actually saving $2,500. That's kind of gone off on tangent, but I just want to see how explain to people, if we get to $250,000, what a 0.01 Bitcoin will cost. Bear that in mind. This was going to be a very long video because it's quite late already, and I've had an exhausting day. But I'll leave you with those 2 bits of good news. Well, I think they're good news, good articles to talk about. But we'll have a quick look at the market before we go. If I look at that, I was looking at Grin. Not at the moment, I think. Market is still hovering around 121, which is good. Again, slight losses, nothing. Might talk about some sideways movements, not being much news about why the Bitcoin price has been up. The crypto market price was up. We're staying above 3,600. What's the big gainers? not much to talk about there. What's the big losses? Again, not much to be honest. 5% is the highest. It's not a big drop. So yeah, we'll leave it there. I'll see you guys next video. Thank you for liking and subscribing, and I'll see you guys on that next video. Peace.